Yeah, so you guys hit the nail on the head. This is all about adjusted gross margins, and we do not have the FSD revenue released in the quarter yet. But if you adjust for credits, it looks something like 13.6. So they had been talking down margins in the quarter. The quote unquote buy side consensus was 15. So this would be a miss versus that. Um, but recall last quarter we said that, hey, there was a big drop in battery prices during the September quarter that boosted the margins by a couple hundred basis points. The CFO was very clear on the last call. It was not going to repeat. So this is more or less as we expected. And we did say when we upgraded the stock that this should be the last quarter of a negative delta like this. They're looking at share gains. They're looking at, significant progress in their most exciting businesses, and they got a nice refresh on the Y right here. So, we would actually look at this as a buying opportunity.
Craig, maybe the less exciting parts of the business, I want to linger there for a moment, because on that subject of regulatory credit, in the third quarter, they made $739 million from selling regulatory credits to other car manufacturers who were trying to comply with pollution regulations. Does that business still exist under, I don't mean like today, but I mean going forward under the Trump administration?
I mean, it's going to be around. A lot of that is actually state driven. So California credits are a very large chunk of the regulatory credits. It's not exclusively U.S. It's global in nature. So, growth driven by federal mandates in Washington? No, I don't see that. But this is a very important line item that I think is here to stay for a while, at least a number of years. I don't see that as something that is particularly at risk right here, right now.
So, hi. My question would be, how much of the revaluation that we've seen in just the last 3 months is really related to their underlying business vis-a-vis Musk's proximity to the president, and because that it's very hard for at least for me to separate the political from the from the operational, and so it doesn't seem as though the operational got 80% better since last earnings time. So how much of it
Exactly.
how much is it you attribute it?
So what's going on here is there is intense enthusiasm for the cyber taxi, robotaxi business, and similar enthusiasm for both Optimus and AI. So the cyber taxi, robotaxi business, the rollout wasn't really that exciting, but the fact that we're going to see an accommodative environment for that business over the next couple of years, with Trump and Musk being bros, right? I mean, you can imagine fairly achievable regulatory hurdles to get those trials out and to get these vehicles vetted, and to develop a business here because of the potential transformational nature for the economy. Let's and safety, with the success here. Optimus, I think, is a little bit further out, but it's nice to dream about humanoid robots. AI, the big spook in the market. So yeah, I mean, listen, it's a bit of a dream right here. But there are a lot of investors that love that dream. The one that clearly is not as big a piece of the valuation that it is for others. You saw the move in Nvidia the other day versus the move in Tesla. Proportionately, people are saying that the use of AI for autonomous is not really at risk the way AI is in other areas of the economy. So there's some very exciting pieces of the business, and investors are willing to be more aggressive in the way they discount these for the future growth.
Craig, you were waiting for that automotive gross margin ex regulatory credits. It looks like we got that headline at 13.6%.
Yes.
How does that?
That was the number I said. So FSD revenue released is the one that actually matters.
Gotcha.
That's the next piece. That's the piece that's missing. I did say 13.6. The last quarter was 15.6. The year ago was 16.8. So that is clearly a miss. And our last quarter note, and everything we've said in our public appearances, we have expected gross margins to miss. We understand management's been talking down gross margins during the quarter. This is probably got some one-time items in there because that was a little worse than what I was looking for. But I fully expect that this is the last quarter where we see these negative deltas, given that we're going to have positive deltas now, both on the ability to pass through price, on the refresh of the Y, and on a much wider pool of buyers with conservatives obviously having some enthusiasm for Elon Musk.
Craig, let me also ask the other headlines dropping here that more affordable models are on track for output starting in the first half. So that lower priced EV, Craig, would you still assume around roughly $30,000? And what could that model mean for growth?
Oh man, I've been talking about the mini car since 2019, and they punted in 2019, and it was the biggest strategic bungle at the company, that I've seen. Right, it was a big mistake. Now that they're going to go forward with this car, it's not going to be with a transformational approach, modular manufacturing. It's going to be a get it out the door, get a great car in people's hands, and working it from there. And that's a good thing. It's going to be supplementary for growth. That's probably going to be one of the things that gives them a little bit more visibility for, 20% plus deliveries growth this year. There's a lot of skepticism around the deliveries growth, given the withdrawal of retail credits for EVs. But this is one of the things that's going to give them growth, and it's going to give them exciting new markets, particularly in Europe and other areas where the drive cycle, people don't drive as long and they tend to buy less expensive cars. So very exciting car, and it's going to be nice to see that on the road in the first half.
One other headline that sort of caught our attention was about the Cybertruck, saying that it is eligible for the IRA consumer tax credit. Can you explain that one to me, Craig? Or I don't know. Or what does that mean? Because isn't it too expensive to qualify for that? And isn't that credit going away anyway?
We have to see. There's a lot of uncertainty in DC right now. I think Musk has more clarity than you or I. So we got to trust him in this in the release. I was I was working with the understanding that yes, the vehicle is too expensive. Clearly they know something we don't.
Well, we'll find out, I guess, Craig.
Yeah.
Thanks a lot. I appreciate your time very much.
Thank you.